Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Thursday, the 7th of June, coming rapidly to the end of the week here. Well, Bernanke's message to Europe was basically just get lost. We're not going to save you. So the European problems are still very much on the burner. They haven't gone away. It's a question of when the market pays attention to it. We've had two trade triangle stocks on the move today. LULULEMON missed earnings. We had a sell signal there in LULULEMON, and also Southwest Airlines, LOVE. That's the symbol there. Many of the sectors are sort of mixed today, but nothing really stands out as we sort of gyrate through this zone that we're trying to navigate through. But speaking of navigation, you may want to give us a call and find out about personal one-on-one Market Club coaching. See if it's right for you. You can give us a call, free consultation, free call, 877-219-1482. You've heard me say this before. If you haven't called, you're missing out on something. So give us a call today, 877-219-1482. So let's go to the markets, and here's the S&P 500. We saw the reversal of Harami cross right here. Market moved up. Big move up yesterday. Today a follow-through where Bernanke is giving his testimonial, but really nothing that's so dramatic. I think we're going to close and we'll have the movement to push this market lower next week. So I think all the enthusiasm we've seen here, I think is going to come to an end, and we're going to start to see this market move down. Both our weekly and monthly trade triangles right there are negative. Currently with a minus 65, we're in a trading range. We are overbought again, much like we were here. Even though the market didn't move very far, it was overbought and it started to come down. I think we're in a similar type pattern now. We may have to give it a few more days, but I think Friday is going to be an interesting one tomorrow, because going home on the weekend, who wants to be short? Who wants to be long this market, not short? So I think it's going to be a very interesting close on Friday. Looking at the other markets, going to the Dow, down much the same. It's all stopped at pretty much where the resistance was, right here. I think that depending where we close today, we could be setting ourselves up to be under pressure next week. On the NASDAQ, you can see there they actually have a red candlestick bar, minus 85. Trend is very clearly down. As you can see, lower lows. And if this is a high, this is going to be a lower high. And if you just do this on a close-only basis, you can see it's right up against resistance. And I think we'll see the market, which is now overbought, start to turn down again. So let's go to our next market, and that's going to be silver. And silver was a big disappointment, as we talked about this before. We had a move up. Looks like it cleared most of the resistance, came right back down. Not a good sign. This is a negative engulfing line. It started. So I think you should be very, very careful in this market. Plus 60 means it's a trading range, and we're just heading down to an oversold condition. We're not there yet. So I don't see any really dramatic to get excited about in silver. What we've always waited for, and we've told this before, is the monthly trade triangle to turn green. It's still negative 29.98, still making profits in that, but it's getting closer and closer to making a turn. So we'll watch that very, very carefully next week. And looking at gold, gold really took it on the chin today. I think it's all part of this basing process, but we're down quite dramatically. We're down almost 2%, down $30 for the day, and that comes on some of the backs of Ben Bernanke's speech. So generally speaking, trend has not reversed totally. We've got the only trade triangle we have up is the weekly, which is green. The monthly has never turned, and it still remains in that negative zone. So just keep watching that for the time being. It's certainly the Fibonacci levels we mentioned last night on the show. If you didn't watch it, you can still watch it on Market Club. But the Fibonacci levels we mentioned last night pretty much stayed in place, and they've allowed this market to pull back. I think you want to give it some room and see how it works out from there. But let's go to our next market, which is copper. Copper, the same thing here. I think this move in copper, probably today's high in copper, right around the 3.43 level, is going to be the high for a while. I think we'll see this market come down. It is overbought. And I think with a minus 75 level, plus both of our trade triangles negative, we'll see more pressure coming into the market. And I think also, if we just take a very simple trend line and just add it right here you can see it pretty much stopping the market on a close-only basis. So I think for the time being, I think if we close down towards these levels, maybe 337, 338, I think the market will be on the defensive next week. So let's go to our next market, and that's crude oil. Much the same pattern in the crude oil, and I'm going to get my illustrator on this because I want to share this with you. And that is, if you look at this, this is not a bullish pattern at all. This is like a little flag pattern. And if we go down below, I would say probably down the 83 level, we'll see this market come down. And we're still looking for it to test the 80 level. And with both of our trade triangles, the monthly and the weekly negative, we are in a bear trend. And that's the bottom line. So I think watch this market either tomorrow or next week. If it breaks through the 83 level on the downside, I think we'll see more pressure. But I think this, for the most part, is going to be where the market stops. And if we just put a very simple, in fact, let me just clear the screen here. And let's just put a very simple fib line in there from the highs down to the lows. You can see we got right up to the 50% level and reversed. So I think for the most part, I think that's going to hold the market. We'll see the market coming back further down. So let's go to our next market, and that's going to be the euro dollar. Much the same plan with the euro dollar. We've seen this market come back up, and I'm going to get my tool here, the fib tool. You can use it very simply. Pull this down and look at where we got, pretty much nailed it in terms of where the market should have reversed from. And let me just get that as clear as I can. Whoops. As clear as I can. Let's just cancel that. As clear as I can. But it looks like we got very close to 26.25. I think the high was maybe 26.21. So very close to the 61.8% fib retracement. I think we'll see this market under pressure. The euro is clearly in a downswing. You only have to look at you've got the weekly and monthly negative going down. Trade score minus 85. I think we'll see pressure on this market on Friday and next week. So we closed last week. Let's see, this is Thursday, Wednesday, Tuesday, Monday, probably right around these levels. So I think we are going to be seeing this market come under pressure, I think, towards the latter part of this week and certainly early next week. So let's clear the screen, go to our next market, and that's going to be looking at the CRB, and that's going to be telling us that we may have put a top in here. Again, we've had the 3 days up, island bottom, usually a pretty strong sign, so we are overbought. And I think we can see this market perhaps come back down. We're still looking for this market to go to 250. It's currently trading at 274, so it's quite another 10% down perhaps. So I think for the most part, I think this market has reached its rallying power. It's a rally in a bear market, as all of these markets are in bear trends. We're looking for a resumption of the downtrend both in this market and the other markets we've just covered. So let's go to our next market. The next market we're looking at is, this is the FAS. We talked about this before. This market was under pressure, had a move up, came under pressure, negative engulfing line confirmed. We're down now towards support. And depending where we close, let me just put the close-only charts. See how close-only charts can give you a different perspective. But if we close below this level, I don't think it's going to be that good. And that level we're looking at is the 25.84 level. But I think if we close here, I wouldn't be surprised to see this market rally from here. We are technically oversold, like here, like we were here. So I wouldn't be surprised to see this market move up tomorrow or even later today. Certainly, I think the overall trend is still bullish. Plus 55 is a trading range. But for the most part, the weekly and the monthly are in bull trends, and I expect that trend to continue on the upside. So let's clear the screen, go to our next market. And the next market we're going to be looking at is where we've had some questions on, and that's going to be the SDS, I believe. Yep, there it is, SDS. And that's the ultra-short S&P 500. Now, again, you've got the markets that are oversold. Let me get my illustrator in here. Let's just go to a candlestick chart. So here's what I'm looking at in this market. First of all, the monthly and weekly is still intact, so that means higher prices. It's a 55 indicating the trading range, and I think we're at the bottom of the trading range with the Williams percent R, much like it was here and again here. So I think for the most part, you've got the support here, so I think we've matched that, and I think we'll see this market start to go up probably next week, maybe even later today or certainly on Friday. But certainly next week, I think we'll see this market start to recover at least back to the 17.5 level, which is not a big move, but I think from there we'll get a much better feeling where this market wants to go. But generally speaking, the market has made a turn, in my opinion, and it's going to head higher. And I'm going to scope this out, and I just want to give you a little bit more of an idea of where we've come from. So here we are. If we look at this on a bigger picture, you can see that this is a nice sort of rounding base. We broke through the levels right here, and we've up, down. I think we're going to see another up, and especially as we're oversold right now. So let's clear that screen, go to our next market, and the next market we're going to be looking at is actually, I think, a couple of stocks, and that is, one is LUV, the airline, Southwest Airlines, actually had a signal today at 9.13, currently trading 8.91, so you can actually pick it up at a better price. And the other one was LULULEMON, who missed earnings. We had a signal today on that at 65.18. It's 63.33 right now. And so it indicates that this market looks like it wants to go higher. And what you can see here with LULULEMON is you have a really big sort of rounding top like this, which is really not a great sign. And I think if you measure from, let's say, this level here, which is 65 up to 80, 15 from that takes us down to 50. I would not be surprised to see a target zone of around 50 for LULULEMON. And it may be a while, but so we'll call that $50 a share for LULULEMON. So it's quite a bit, about 26% down from these levels. We are in a little bit of an oversold condition, so we may see a bounce, but generally speaking, the trend in LULULEMON is down, as witnessed by our 100% reading in those markets. So let's just clear the screen, and let's finish with a little commercial. Not a commercial, of course, it's to help you. This is all about helping you become a better trader. So give us a call. One-on-one Market Club coaching. Is it right for you? I think it is, and I think you'll find out when you give us a free call at 877-219-1482. The consultation is free. The call is free. You've got nothing to lose. Give us a call. 877-219-1482. Hey, I'm Adam Hewison. I'll see you tomorrow. Let's see how these markets work out today, and have a great trading day.